What the is an ETF? Good question. So perhaps you've been thinking about investing in shares, you might have saved up some money, you might have even set up an online trading account, had a little sneak peek at the ASX. Now what? When it comes to the crunch of deciding what to invest in, it can be super overwhelming. So while, of course, as always, we can't provide financial advice specific to your personal circumstances, I hope that we can demystify some of these acronyms when it comes to investing in shares. So with over 2,000 stocks listed on the ASX or Australian Stock Exchange, it can be a daunting prospect to think about picking the most competitive performance. And that's not even considering your options in available through international markets. So it's one of the reasons why people get stuck and actually delay making any type of investment decisions at all. And also why the Australian government's Money Smart site recommends that you focus on building a diverse portfolio of investments, so your eggs aren't all in one basket. So the good news is that making sensible investment decisions as a novice or starting out, or even as an experienced investor, doesn't have to involve picking individual companies on the share market. Another way to invest is through buying shares in a fund, which will allow you to have exposure or be invested in hundreds of companies with a single purchase. So this leads me to ETFs, or exchange traded funds. You may have heard of the term. They've been exploding in popularity in recent years. Recommended by the likes of Warren Buffett and even the Australian government, ETFs are a relatively easy and cost-effective way of getting started with investing. And as I said before, allows us to invest in hundreds of companies at the one time, especially if you're starting out. This reduces risk because of the diversification. So what the is an ETF? So ETFs are a type of managed fund. So managed fund is a group of individual investments, maybe made up of different stocks, companies, alternatives, bonds, etc., that have been combined by an investment manager to create one entity. So when you buy into this fund, you're owning a share of all the investments within the fund. So if that sounds confusing, just imagine that an ETF is like a buffet. So your plate's filled with lots of different types of food, rather than, buying one single meal off the menu. So let's look at an example that's relatively easy to get our heads around. Imagine an ETF that lets you invest in the top 200 companies on the Australian Stock Exchange. So if you make, say, one purchase, $1,000 or $2,000, you become a shareholder of all 200 of these companies in one trade. So you get to have a taste of all these different, meals on the buffet. So your investment will grow in line with this group of companies. So while some funds are actively managed, ETFs tend to be passively managed, or so the difference is that an actively managed fund is run by fund managers who are actively choosing what stocks to include in that fund. ETFs tend, or more passively managed ETFs, tend to track a benchmark or index. So this typically reduces the operational cost, because essentially the decisions are made based on algorithms rather than a panel of humans. So it in turn reduces the cost of investing in the ETF, and then that's a major reason why ETFs are so popular. So on that note, what are some of the benefits of investing in ETFs? So simplicity. Simplicity is a big tick when it comes to making your first trade on the stock market. And instead of wading through a whole pile of annual reports and investor commentary and about hundreds of companies or investments, you can instead select an industry or a geographic region or an asset class to invest in through the one ETF. So you don't have to have a personal understanding of each underlying investment. Another benefit, of course, as we have mentioned a couple of times already, is diversification. So not having all your eggs in one basket. Especially if you're starting out or if you don't have a lot of money to invest, ETFs allow you to access a number of companies without, irrespective of the size of the investment. So you can have access to a whole lot of different geographic regions across different industries, etc. Cost, as I mentioned before, is another benefit. So while a lot of the ETFs aren't actively managed, fees are generally kept to a minimum because there's less human capital required to manage the fund. So, of course, as always, though, it's important to check the fees across any ETF or any fund that you are looking at. Transparency. Information on the underlying investments and fees can be accessed anytime through the fund manager's website. So a couple of Australia's leading ETF or largest ETF providers are Vanguard and BetaShares. So these are two websites to have a good explore and see when you log into not log in, but just when you have a look at the website, you'll be able to look at the different ETFs they have. You click into those individual ETFs, you'll be able to see their performance, their fees, their top companies list of companies that they invest in, their exposure in a geographic sense across different industries. And both these websites actually have a heap of different charts and easy to understand educational articles. So they're a great place to start from a research perspective. Now, of course, most of our beautiful community is also interested in ethics when it comes to investing. So I will include a link also to CanStar has released a list of 10 high-performing ethical managed funds and ETFs. So you can check that list out. And BetaShares and Vanguard both have ethical options. In fact, a couple of the ethical ETFs you may already be invested in if you're a Verve member through your super. So that's extra interesting to check out. So it's interesting to read that Alex Dunnan, director of Rainmaker, which is a leading sort of Australian wealth management research firm, made a comment that anyone who claims that ethical, social, or corporate governments will cost you returns is a dinosaur. So it is very exciting to see how some of the ethical funds have been performing over the last recently as well as over the last 5, 10 plus years. So is there any negatives to ETFs? Of course, no investment is perfect and ETFs have their downsides too. So of course, one of the major ones is that you cannot guarantee outperformance because especially in the ETFs that are tracking an index or a benchmark, you're not going to outperform the market, but hopefully you're not going to underperform the market because what you're investing in is the market. There's also the to look out for is to not have too narrow a focus when you're investing, when choosing which ETF to invest in. So a narrowly focused ETF, for example, may track a single sector segment like healthcare or technology stocks. And like anything, when you have a narrower focus, there is more risk if that particular sector underperforms. So especially when you're starting out, as we've mentioned quite a few times, diversification is key, and some of them really diversified garden variety ETFs are the lowest cost too. So last question, how to buy an ETF. So just like shares, ETFs can be purchased or sold through a broker or online trading platform. Most of Australia's large banks have trading platforms that you can just link to your savings account. And once you've researched, you can just, you'll just need the ASX code or ticker, a 3 or 4 letter identifier to pop in, and it essentially makes sure that you buy the right ETF that you're after. So there's no minimum amount required to make a trade through the ASX. However, fees tend to be, say, between $10 and $20. So you probably want to be looking at making a trade of, say, $1,000 or at a time, semi-regularly, however regularly you can do it. And so the fee keeps a small proportion of your the amount that you're investing each time. So what's the verdict? ETFs are likely to be a relatively cheap and efficient way to gain broad exposure to the investment market. But of course, as always, look carefully before you leap and do your homework about what you're investing in, what the associated costs are, and make sure you're making a decision that's suited to your personal needs, whether that's your risk profile or your investment time horizon. And of course, get some help if you are unsure, and engage in bias. Do further research and even add your comments and questions below, and let's continue the dialogue. So I hope this has helped. Look forward to your research into ETFs.